Today we are going to discuss Bitcoin, inflation, and fiat currencies. What is inflation? As the cost of goods and services rises over time, the buying power of the average person decreases. For the same amount of money, the quantity of the item drops, which is often represented as a percentage. Inflation is the reverse of deflation, which boosts the buying power of the currency. Now, let's discuss inflation further. It's simple to track the price of a single product, but it's difficult to track the price changes of numerous goods at once. Commodities like petroleum, minerals, and services and utilities like healthcare and entertainment are among the items that need to be extracted from a large collection of products. Using inflation, anybody can see how prices have changed over a given period of time for a certain collection of items and services. Inflation is caused by a rise in supply, although this may be dealt with in a variety of ways. There are a number of ways in which the government might raise the amount of money in circulation, such as by printing more money or giving it away. As a result, the value of money decreases as the money supply grows. Inflation and cryptocurrency. The high inflation rate in fiat currencies will lead consumers to consider cryptocurrencies since the value of dollar and euros held in banks seems to be decreasing. Despite the risk of inflation, Bitcoin and other cryptocurrencies are still risky investments. Understanding the economics of assets such as Bitcoin may be a difficult task. However, there are some clever characteristics in cryptocurrencies that may assist to withstand inflationary pressures. In order to accomplish policy objectives and set the value of Bitcoin, governments cannot manipulate interest rates or increase supply. Regardless of market circumstances and feelings, Bitcoin is meant to rise in value in uncertain times. As a communal asset, it is easier to store and trade at any time. Inflationary pressures are less likely to have an impact on supply. Bitcoin, on the other hand, has a limit of 21 million bitcoins. A new block has been created and 6.25 Bitcoin have been added to the blockchain network as of this writing. The mining reward will decrease by half every 4 years, which is known as the halving process. In contrast to gold and other assets, Bitcoin's mining process and supply constraint over time make it more resilient to inflation. Is there inflation in crypto? As Bitcoin gets mined more, it undergoes inflation. However, the halving mechanism that automatically decreases by 50% every 4 years minimizes this. Bitcoin's inflation rate is very low compared to the inflation rate of fiat currencies. It is no longer a crucial aspect for investors to take into account as fiat currencies continue to rise in value. It's impossible to compare all cryptocurrencies to Bitcoin. Stablecoins, which are tied to a certain currency like the US dollar, are another popular kind of cryptocurrency. Inflation will have an effect on the value of these stable coins, just as it does with fiat currencies. Another point to consider is whether or not a certain exchange offers incentives on stable currencies for storing funds. Keynotes. There is nothing more to inflation than currency depreciation and a rise in the cost of goods and services. Inflation may be caused by a lack of oversight by the government or by depreciating it. Depending on the context and individual perspective, and the pace of change, it may be characterized in terms of cryptocurrency. There are two types of assets that are effective at protecting against inflation: tangible assets like real estate and equities, and crypto assets like Bitcoin. Please subscribe to the channel to learn more about cryptocurrency and trading.